On this episode, we're going to talk about risk management. Guys, the best mentors in the game, people that you follow, have all blown accounts due to risk management, which is a very tough lesson to learn and get on the road. But once you do learn it, it will be the key to success. You can have the best strategy in the world and still blow your account because you can't manage risk. This is the ICT series with Dom to Bomb Trades, episode 8. All right, guys, there's 4 things that I look at when I think about risk management. That's your stop loss, risk per trade, daily loss limit, and risk to reward. Now, there is some tools that can help you out, kind of figure this out. I'm going to show you in the charts, and we'll get into it right now. All right, let's talk a little bit about my rules or my risk management on what I do. So first, let's go over what we just talked about. So max risk per trade. That's one. And then another one is number of trades. Another one is daily loss limit. And these change between if you're like in an evaluation process or if you're live, whatever you're doing. When to stop trading, and then how to determine contract size. So let's go over that. Max risk per trade. So right now, if I'm doing an eval, let's say I'm doing an eval, max risk per trade, I'm really good at my strategy, so I'm trying to just get through the eval process, so I go pretty heavy. So my max trade for evals is usually like 500, only because there's usually like a $2,000 drawdown, so I do a fourth of the size. When I'm on funded accounts, I'll use a $300 risk per trade, and then until I build these accounts up, then I move it usually to 500, and then I'll go so on and so forth. So let's put something over here. Let's do eval, and then we'll do I'm not good at typing, and then we'll do funded. So eval and funded. Hopefully this helps you guys out a lot, actually. So 500, and then once I pass, I'll do 300. But the 300 gets upped as the account goes in size. So number of trades for eval, number of trades usually is, honestly, if there's 3 setups or 4 setups in the day, which is rare, then I'll take the 3 or 4 setups. But usually 2 to 3 for eval, and then 1 to 2 for these, 1 to 2 for fundeds. When daily loss limit, man, daily loss limit on eval, if there's not a drawdown or a trailing drawdown, I'll just go all in because I don't want to waste my time. Now, if you're new, you should do 1,000. So for funded, I do anywhere between 600 to 1,000. Depending on the account size. If I have a good buffer, then I'll risk 1,000 for the day. Once I'm done with that, I don't make any trades. I close my laptop. When to stop trading, when account will pass 3 trades or daily loss limit, which is probably your whole account. And then when to stop trading on this is after 2 trades or the 1,000 or 600 limit. So I make I literally do 2 trades on my funded accounts. I do one, and then if I do another and they're both L's, I'm out. If I do one win and then a 1 loss, I'm done. I'm not looking to I made my trades. I'm not looking to chase anything, because after that point, it just gets emotional. and you're emotionally trading. So contract size, 1 mini guaranteed on evals, and then contract size varies. Mostly you'll want to do micros, because you can do 10 micros and then scale up or scale down. But this is basically where I sit at for my evals and fundeds. Very good strategy. Hasn't let me down. It's something to really consider and look over. Now, everyone's different, guys. Everyone has different. You have to figure it out yourself. This is a very good start, and you might stick with this and roll with this, or you might have something that fits you better. So let's go over these in today's trade. Let's do that. Maximum risk per trade would be $500 to $300 funded. So today I wanted these London lows. These were my draws on liquidity. I knew that the market got what it needed up here at the beginning of the day. And if you saw my trade pre-market analysis video, I said that there's no liquidity up here. There's only one way to go, and the one way to go was down. And that's where it went literally all day. And I don't think it did leave this breaker block, barely. So I had a retracement into this 1 minute FVG. As you can tell, we really took a dump the first 3 minutes of the market. I had a break of structure at this candle, and then that's where I entered the trade. So my contract size, guys, when it talks about contract size, that's where you're trying to figure out how many contracts you're going to do. So 1 mini guaranteed for eval. If this was an eval trade, it's 1 mini. And then for today, it was, I think I was risking 400. So I have a little bit of a buffer. I was fairly confident with this trade. Once I got in, my stop loss was above this FVG. Once I got in the trade and then this came out, I figured this was either macro, you got the 950 macros, or I think there was some Iranian news coming out. I don't know what it was, but it didn't hit my stop loss. And if it did, that's okay. I still had one trade in the chamber ready to roll, which right here you could tell was a good setup. And it didn't. My stop loss didn't hit. My take profit hit right here. So we had another, I guess, Newsweek candle, and it hit my take profit in probably, I think, 5 seconds on this candle. So I was in there for fairly little bit of a long time, but we saw the trade through and we got to see the take profit. And if you could tell, there's a reason why this was my take profit line and a reason why this candle stopped right here. It didn't stop down here. It didn't stop up here. It stopped right here because this is where sitting orders are, guys. That's what the power of liquidity is being shown right here. This is the power of liquidity. The market wants it. So my contract size was varied off of this. I only did one trade because I could have done a second trade. Now, if I didn't enter here and I got spooked out, and maybe some people will put their stop loss here, which I usually do put it above my swing high, but I like this fair value gap. Figured if it wanted to run up more, it would. I could have made a second trade right here in the 5 minute breaker block. We had a 1 minute IFVG, and within 2.5 minutes, bam, hit take profit. So that could have been one loss and one massive win, which would have been awesome. But I just did one trade. On the eval, I could have did this trade, maybe got out down here, saw another one, got out right here, saw this one. But at this time, it was getting kind of dull. But could have did another one, and so on and so forth. Could have seen a reversal right here, maybe took the upside. I mean, evals, you just want to trade until you're passing. And then for when to stop trading. Evals, I stopped trading when I'm not going to force a trade, but I'm going to look for every possible chance, whether they're A plus setups, B plus setups, or C. So like this is a long, once this gets inverted right here, okay, this is a very long wick. So your risk size is, you got to be mindful that using one mini on this is, I'll tell you, 10 points. If this was NQ and it was 100 points, it'd be a lot. It'd be $2,000 or $1,000. This is probably $1,000 risk compared to making 2,000. So when to stop trading, you would want to, on my funded accounts, I stopped trading at 2 losses. So those 2 losses could be anywhere between 300 to 600. If it's a bigger size, 1,000, like I said earlier. And then for evals, you kind of just want to trade, man. You don't really want to have a massive, they have trailing drawdowns where they're kind of like stop your account at negative 1,200. But if you only need one in the chamber to, really hit it home run. So if you're buying those more expensive evals that are $80, $100, $200, $300, then be mindful. But like if Apex is having a sale and you have cheap accounts, just if you trust your strategy, which everyone should, then just follow through with your strategy and you'll pass no problem. And then contract size we kind of talked about. I took maybe, I forget how many micros I took on MES, but it was enough to where my risk size wasn't, it was like 400. It wasn't over, it wasn't 1,000. I wasn't risking $1,000. I was risking my normal size. So contract size depends on your risk size. And then I use this for my risk to reward. I always at least want to have a 1-to-1. So I was risking 1 for 1 to 1.5. So if I had, if I risked $500, let's see. This is very simple math. I don't know why I can't do it right now. My brain is done for the day. So if I'm risking $500, you're making $750. You're 500 plus 750. Which I risked 400, so I made 600. I mean, this was a very awesome day compared to the days we've had. Yesterday, chop zone right here. This was terrible, this chop area. All right, so these are my rules. These are what I go by. These are my evals and fundeds. If you want to pause the video and take a screenshot and maybe tweak it a little bit for yours. I know that back in the day I used to have 2 trades in AM and then 1 trade in PM, but I got sick of trading all day. I was so done with it. So I knew that most of my trades in the afternoon I could cut out, because I think it was like there either was one good setup or I had to really work for one. And at the end of the day, it wasn't worth my time, effort, when I could trade from 9 to 11 and be done for the day. So that's kind of my rules, what I go by. And I hope that helps you guys. If you want to screenshot it, go ahead. All right, now that you got to see a little bit of how I manage my risk, let's talk about the biggest mistakes ICT traders, or basically any traders, make when they're first starting out. Revenge trading. Okay, this is the number one thing that you might come across when you first start trading, is you'll lose a trade and then you'll get back in and probably try to go to the opposite direction, and it'll go the direction that you originally planned. So then you go back to that direction, and it's literally just back and forth until you're constantly losing all of your money. That's a huge one. It's probably the number one that comes first when you start this trading journey that you're on. Moving stop loss. When you can't understand that if the price hits this point, then I'm no longer confident about this trade, that's your stop loss. There's no reason to move it, because you are technically right in your analysis, but then you go against it when you move the stop loss. Increasing size after a loss. If I only have 2 trades for the day and then I lose one, so then the second one I think, well, I'm going to double my size. That's going against your rules. And then you end up losing triple the amount that you were supposed to lose for your rules that day. Another one is over trading. Kind of goes along with revenge trading. You lose one, you take another. You lose one, you take another, and it's just a vicious cycle that you constantly can't get control of. Sometimes you just need to close the laptop, shut the computer down, and walk away. And then probably the second biggest one, I think, is trying to make back your losses. When you have a loss, everyone has red days. Everyone's going to have them. It's about how you manage that red day. The people that you look up to right now have red days, and most traders are transparent with that because it shows like, hey, this is my red day, but with the risk management that I have set in place, red days are going to happen, and it's okay because at the end of the month, I'm not losing money. I'm making a lot. So those are the biggest mistakes that I would focus on beginning trading or starting this trading journey. All right, guys, I'm going to leave you with a little something that stuck with me when I first started. The first job as a trader isn't to make money. It's to stay in the game long enough for your strategy to work. Once your strategy works, then you will start making money. It's about mastering your model or strategy. So I hope that helps. I have a short, quick clip that I want you guys to see on a series that I'm doing next week. I'm doing $100 to $5,000 using Robinhood. It's going to be really cool. Check out the clip. And then, as always, we're going to make every single one of you guys profit.
Houston?